Tyler, you've been following mining companies and material companies a lot longer than I have, but one that you and I have been making videos about for about a year now is Albemarle. A company reported earnings on May 1st, and its stock's been on a good run since the earnings release came out. It's up 14% during a pretty volatile market. So that's a pretty good 2 week run. Indicates that the market generally liked what the company reported. You ready to take a closer look at Albemarle's results? Talk about the lithium industry broadly, where things are, and how you're thinking about the stock as an investment.
Yeah, let's go. It is a very unique commodity, but it's a mined commodity nonetheless. And so there's some pretty broad lessons that we can learn from this particular quarter about investing in mining companies, not just Albemarle.
Useful education for investors of all stripes. All right, Tyler, let's get to it. But first, just a reminder, we have a great partnership with the Motley Fool who sponsors this video. If you're looking for even more great stock ideas, I think you should really check out our special link. You see it on the screen, fool.com/unscripted. It'll be on the screen the whole video, but you want to check it out. Go to that special link. The Motley Fool for free is going to give you its 10 best stocks to buy right now. Definitely check out that link. Okay, Tyler, I'm going to bring up Albemarle's results here. It's a financial summary for their quarter. Give us the details.
This slide is, I think we can call it the perils of fixed cost mining companies. Mining, as most people know, it's a pretty asset heavy business, which has a lot of fixed costs. And so when you are mining or drilling or whatever you're doing to extract that commodity, it's your price. The price at which you actually do that isn't going to change much, and your margin is almost going to come entirely from the price at which you can sell that product. And this is a perfect
Yeah,
example
they
of
they call them heavy industry for a reason because they're very asset heavy. And if you have heavy mining equipment, the infrastructure that's in place, you have to maintain it. You have leases for equipment, you have borrowings. All of those costs are what those costs are, to your point, Tyler, right? They don't really
yes,
change that much.
no. And if you could find businesses in commodities that or manufacturing that can run at high utilization rates and basically offset all of its operating costs all the time, it can be a beautiful thing. I think I've mentioned it a couple times here, but like oil refiners, they are incredible cash engines because they're able to operate at very high utilizations and basically keep its fixed costs in control with its prices for a long time. This was not the case at Albemarle this quarter, and this is exactly what is the downside of investing in mining companies is that when sales go a little sideways because of commodity prices, you're going to see huge variances in net income. And this was a perfect example of it because this time last year, got about $2.6 billion worth of sales because of higher prices. We saw a massive price spike in much of late 2022, early 2023, and then just started falling off from there. This quarter was on a historical basis, not the like lowest prices we've seen, but pretty on the low side. And as a result, we saw almost a 99.9% decline in total net income. If you want a visual of this, Jason's going to pull up the next slide here. It just goes to show exactly what he's talking about. The cost of goods sold was practically unchanged. And in fact, we even saw an increase in volume for the quarter across its entire suite of product, but with a little bit increased lithium from some new mines coming online, a little bit improved sales from these other entities, we actually saw higher volume and fixed costs were basically unchanged, $90 million. But if you're increasing your volume, you expect to see a little bit higher cost of goods sold. But pretty much everything that happened in this past quarter came down to the price of the commodity. Just look at that giant yellow bar. You went from $1.7 billion in EBITDA in the first quarter of 2023, or 1.4 billion of it was wiped out by price. And so this is the downside of working in commodities. But if you invert this, this is the upside of working in commodity because now we have a business that's basically at zero in terms of its actual net income. If we were to pull this forward a year or so, and all of a sudden lithium prices are considerably higher than they are now, you could look at a company where that it's going to 10x its earnings. Yeah, sure, it maybe compared to 2022, it doesn't look good, but to go from 0 to, I don't know, $10 a share, that looks fantastic. And a lot of investors are going to notice that. And so this is the wild ride that you're going to get with mining companies where finding them at these nadirs of net income is the thing you want to be looking for when it's time to actually invest, because this is typically when like attitudes towards them are the worst.
Yeah, I think that's really important because it's easy to fall into the trap of market timing, right? Where you're basically guessing what's going to happen next with a stock. But when it comes to very cyclical industries, you really do. And again, you're not trying to time the market, you're trying to understand the cycle, where the stock price is and where the business is in relation to the cycle, and try and invest accordingly. Like you said, Tyler, you want to be counter cyclical. You want to invest in these when everybody else is has given up and doesn't expect things to turn. Let's talk about where management is looking with their outlook for the company going forward.
Yeah, so this gives a pretty good picture of what we're talking about in terms of price, right? Because last year, for the entire year, is a ton,
That's these
a kilo.
4, green rectangles right here. This is the
Yeah,
price of lithium.
there's actually a bunch of different ways that you can get it, and they've all kind of settled around calling it lithium carbonate equivalent. It's the way of measuring it on an apples to apples basis. So last year was about $40 per kilogram, and based on what it looked like at the end of the year, what it looked like in the quarter, second year and a half, gives you a picture of what the business would perform on a sales and EBITDA basis, which I think is pretty illustrative. Like, it's impressive for Albemarle to put these out because this is a pretty accurate or pretty thorough presentations of what you can expect to get from this. Now, a lot of it's going to come down to whether or not any of these numbers can be achieved. Basically, right now, at the end of 2023 is where we saw this $15. So all of those other numbers was the 2023 when things were better for the lithium industry. And so there's, legit possibilities that through 2024, we could still see relatively low margins, relatively basically break even in terms of EBITDA and net income. And so with all of these, management is saying doesn't sound like investors shouldn't expect much in 2024. There's a very real possibility that lithium prices might not go anywhere. We've seen a lot of talk in the EV industry of pulling back, slowing down growth because demand isn't quite there. And that's really starting to flow through with lithium prices. It's just more or less that, like any cyclical commodity, things can go sideways.
It can take a long time for these commodity markets to turn. You and I followed the oil and gas industry for a very long time too, and very commodity driven industry as well. And we've seen that cycle for certain sectors took a very long time to recover. I want to take a minute though and go through just a little bit more about guidance and also some expectations for management and some things that they're working on and some progress they're making. So this was, I think this is important, is that guidance they gave was basically just a reaffirming of what they've already told us after the end of the fiscal year earlier this year when they gave guidance. So they're not moving the goalposts here. They're saying we're basically on track. They're also pointing out a few things that they're doing to cut costs because it is going to be a lower price environment than we've seen. And they want to make sure that from a structural perspective, they're taking steps to strengthen the bottom line. They also given a little bit of update on a couple of big projects because one thing that had been on the table, Tyler, was there was an acquisition that was in place when prices were much higher. There were some agitators with that company they were looking to acquire. The deal got unattractive and Albemarle walked away from the deal. And they found some other ways, like they acquired a larger interest in a joint venture that they had to increase their own asset base. So they continue to make incremental progress. I think that's really important. Here's my question for you as we wrap up the video, thinking about where Albemarle stock is right now, hopefully through the trough of the bottom of the cycle. Demand for lithium is going to continue to be strong. We know that with the electrification of everything, whether it's transportation, energy storage for the grid, all of those things are happening. Are you buying what management's saying? And do you think Albemarle is any more or less attractive today as an investment? And again, I think investors should be thinking not a trade here, but you're thinking about the next 3 to 5 years plus. Where do you think Albemarle is?
I think Albemarle as a business is one of the better lithium miners out there in terms of doing good operations, has a good handle on things. Probably dodged a bullet with that acquisition because they were trying to do it at like the top of the market.
That's for sure. Hindsight's always good, but I appreciate management's discipline to not fall in love with the hunt. And you got to bag this deal and walk away when they couldn't get the deal on on the terms that they thought were appropriate.
So with that said, I think if people are looking at this market, Albemarle is a good company to invest in this industry. I think 2024 could be maybe go sideways, a little weak in terms of actual sales growth. Profitability is probably going to be a little stretched for the year. So it's one of those things where, yeah, the stock looks relatively attractive, but it's not like I want to immediately want to jump into Albemarle. I think there's going to be lots of buying opportunities over the next couple months, like 6 to 12 months, as the rest of the lithium market tries to figure this out. I think a good gauge of kind of the optimism of the lithium market will more or less be like when you start hearing things from EV companies, where we start to see, oh, yeah, demand is doing much, much better. And we're trying to scale up production again versus a lot of these comments from managements lately. We're trying to manage costs and match production with demand and things like that. Once you actually start to see a little bit more of a voracious demand for EVs, US and globally, I think that's gonna be one of the better indications that Albemarle is gonna be a much better positioned stock and probably when you wanna start looking at it more aggressively.